Good afternoon. Global stocks edged higher, underpinned by hopes that inflation was being tamed enough to ease the pace of interest rate hikes and reduce the chances of deep recession. As investors wait for tomorrow's US CPI data, the dollar was steady while gold scaled at 8-month peak on bets that the US inflation data will show a slowdown in price increases. Meanwhile, crude oil prices shrugged off earlier losses to move higher, while copper prices held near 6.5-month highs on optimism over the economic reopening of top consumer China. Locally, Steinhoff has withdrawn its plans to list US-based mattress firm in a move unlikely to surprise investors. The listing had been planned to raise capital but was delayed last year as global markets slumped in the wake of rate hikes basically globally as well. But Steinhoff says that it would reconsider listing mattress firm once markets were favorable and that it was considering all options for the division. To talk to us about the market dynamics, we are joined by Carmen Pelona, who's a portfolio manager at Sanlam Investments. Carmen, thank you so much for your time. I mean, it's been quite an interesting week. We're still talking about the China reopen story, and then we're also taking in some of the Fed speak coming out of the US. How are you assessing JSE and the global market sentiment right now?
Yeah, we started off the year very strongly, as you've mentioned, both domestically and on a global level. And I think it's probably a breather for the markets globally or for investors. As you've mentioned, on the back of the China reopen, that's the big theme for the first few weeks of 2023, as well as the expectation that the Fed will be cautious in terms of its increase in its interest rates going forward, but also the comfort that they are guiding that the interest rates will stay higher for longer, but at least we know this now.
So with China reopening, their borders, marking an end to COVID-0, what would you say is the main question around this reopen right now?
I think at present it is focused on the government and what their reviving of the growth theme is going to be. So where they're going to put most of the efforts, and more importantly, how quickly. So at present, it seems that the theme is for China. We're definitely going to see some measure of growth. Still going to be low single digits, but having said that, it looks like the government's target is going to be above 5%. Whether they actually get there or not, we need to see what the plan is and how the market receives it. But generally, the view is that there is a growth story in China, but how quickly will that roll out?
What's your assessment of some of the Fed comments coming out of the US, given what I would describe as a Goldilocks jobs report figures from Friday?
Yeah, so as you've mentioned, the jobs number was definitely a surprise to the upside. There had been hope that they would show some weakness in the jobs market, but unemployment at a level of 3.5%, which lends itself to the fact that we may be due for a soft landing in the US on that basis, keeping in mind that despite the job numbers and the increase there, or above expectations at least, what we also did see was there was a decline in the growth of the average hourly earnings number. And that's given the market some sort of solace that the rising interest rates are doing the job, albeit very, very slowly.
Which is a nice segue into my next question in terms of whether you believe tomorrow's CPI figure will determine the size of the Fed hike next week.
We generally look for that as an indicator. What it does do is give sort of insight into what the discussions will be like in terms of the Fed and their decision. I think going into January, we had expected to see an increase of 50 bips initially, but it seems to be swaying more towards the market or consensus accepting that's going to be a 25 bips increase. Having said that, we are expecting inflation to come down marginally to 6.5% from a consensus basis versus the above 7% in November. If we do see an increase above the 7.1%, I think that that is a cause for concern.
So we have U.S. earnings season kicking off this Friday with some of the major banks set to report. What's your expectation going into this earnings season?
I think based on what we saw in 2022, the expectation by the investor market is that we are likely to see a decline in earnings. This will be the first decline on a quarterly basis since the start of the pandemic. So very, very low expectations off the bat. Having said that, again, as I've mentioned before, the key year is going to be what management's rhetoric is in terms of the outlook for 2023. So definitely looking to see muted earnings or decline in earnings for the period. So I think of a very low expectation base, there might be offshoots of surprises, but very, very unlikely. And it's probably going to be very sporadic.
On that note, then, are there stocks or sectors that you believe will shine, given that some out there still believe that, the earnings season might be quite miserable?
I think in going forward, in terms of shining for 2023, the China story is definitely going to be very interesting. I think the key there is going to be commodities or resources. We've already seen the iron ore price jump significantly, over 50% since November last year. So that's going to be an interesting story to follow. And obviously the read-through for the resource sector in general. Off the bat, in terms of the expectations for earnings and what the impact's going to be, as I've said, I think that's been priced in. We've definitely seen a pullback across the globe. So I think if anything, they'll be surprised to the upside.
All right, Carmen, thank you so much for your time. That is Carmen Belwana, who's a portfolio manager at Sanlam Investments, giving us her perspective on the markets. And as we mentioned, that all key important figure coming out tomorrow, which is the US CPI figure, and we'll unpack what that means for the Fed as well as other central banks. But that is it for me. We're going to take a quick break. When we come back, we'll have more news for you.